What was the bank rate? What is it now? How does that impact a variable rate holder? Hello, everyone. I'm Christine Kopr with Sotheby's Realty in Vancouver, BC. And today I am joining Jacqueline Zerbe, mortgage broker with Total Mortgage in North Vancouver. Hey, Jackie.
Hey, Christine, thanks so much for having me. Always a pleasure. Also, I have to tell you, I might be
Yeah.
slightly distracted because our family grew by two, and this
Oh,
one's very needy.
so cute. Love connecting with you. It's been a while. And today we've got some awesome news. So why don't you go ahead and let everybody know about this latest interest rate
Yeah,
decrease?
finally, good news. Today, the Bank of Canada lowered their overnight rate target by a quarter point. So they lowered their overnight rate from 5% down to 4.75%. That is not the same thing as the prime interest rate. A lot of people get confused thinking that, oh, prime's 4.75. That is not the case. So prime was 7.2, and now most
Oh,
likely lenders are going to follow suit and decrease to 6.95%. This is good news for anybody that has a variable rate mortgage, a line of credit, student loans, that kind of stuff. And then your discount beneath prime will lower accordingly as well.
can you give us an example of the math? Obviously, this hasn't happened yet. Like the Bank of Canada made their announcement, like you said. Is it a guarantee?
So usually when the Bank of Canada decreases their overnight rate by a quarter point, lenders usually follow suit. Sometimes they're a little bit slow to do that. However, it's usually if the bank decreases by a quarter point, the lenders will also. Sometimes we've seen them only decrease by 0.15%, but most likely they're all going to follow suit. In terms of what that equates to in dollars and cents for borrowers, for every $100,000 that you borrow in mortgage money, your payment will decrease by $15. For example, if you had an $800,000 mortgage before the prime rate decreased, your mortgage payment was about $5,700 a month. And this is based on a 25-year amortization. Now that payment has dropped to $5,580 a month. So that's a decrease of about $125 per month. Now keep in mind that's only for one quarter point increase. So as prime continues to
Decrease?
decrease, yes,
Decrease?
yes,
Decrease.
yes,
I know
sorry.
we're so used to talking about increases, right?
Yes,
We're so
yeah.
programmed.
So as prime continues to decrease, you're going to see that payment decrease as well.
So on your larger mortgages at around 800,000 on a 25-year amortization with which is the length of time you have to pay off your loan. Some people have 35-year amortizations, which make the payments are smaller. But on your 25-year am, for that size, you'd be looking at a $120 decrease in your monthly payment as soon as the banks follow suit.
Correct. And specifically, if you have an adjustable rate mortgage, so where your variable rate is floating with prime, you're going to see your payment fluctuate. If you have a static variable rate mortgage, your payment's going to stay the same, but more of your payment will go towards principal and less towards interest.
Awesome. Okay, thank you so much for breaking that down. For fixed term mortgages, how does this impact?
Yeah, so we haven't seen a change in fixed interest rates right now. However, the bond market, which dictates how fixed rates are laid out, we've seen that gradually decrease over the last few days, and hopefully that will continue because of this good news. So on Friday, we had the GDP numbers come out, and they came in lower than expected, telling us that the economy is slowing down. That's what the Bank of Canada wants to see. And then obviously, we know inflation has been decreasing over time. That's another factor that the Bank of Canada wants to see. So all these positive data points are encouraging to bring fixed rates down. So even though the Bank of Canada's announcement today directly impacts prime and variable rate mortgages and lines of credit, fixed rates might trickle down a little bit because of the positive news and how the bond market is reacting. So stay tuned. In the next couple of days, we might see a little bit of a discount on the fixed rate side.
In the case of rate decreases, this is good news. You're probably having conversations every day with people wondering what strategies are out there now that we see beginning of this decreasing rate cycle.
For anybody that is trying to get into the market or has a mortgage that's coming up for renewal, my biggest piece of advice is to start early. Start the process early, get all your ducks in a row, start speaking with mortgage professionals, because the more time you give yourself, the more time you're able to learn what's available and explore your different options and really equip yourself with the knowledge to make an informed decision. So the expectation is that interest rates will continue to decrease over the coming months, but none of us hold a crystal ball. So it's really important to know what your own financial situation is, because your financial situation might be completely different than your neighbor or your brother or your parents. So it's important to have those kinds of conversations so that you're setting yourself up for success. And it gives us time to monitor the situation. For example, right now, there might be a small window where fixed rates are going to be decreasing. So if we have your file ready to go and we've got all your documents up front, we can secure rate holds now for the next 4 months. You never know what's going to happen next week or in the coming weeks where something might have the opposite reaction and force rates to increase. So we have these opportunities to hold these rates in these rate windows where we have good news and the bond yields come down and prime comes down. Start early and start those conversations and keep them ongoing for sure.
Definitely, you make such a great point of like being in on it, getting ready so you can secure that. And if something happens, because we have another rate announcement coming up here.
Yeah,
next month, July.
July 24th is the next rate announcement, but there's a lot of data points that happen between now and then in terms of inflation numbers, GDP, employment, unemployment, all that stuff. So that's our job, is to keep track of all of that so that you, the consumer, can just relax and go about your day. And in the meantime, we're working diligently behind the scenes, keeping a tab on everything for sure.
What about strategies now? Because I'm sure you have people rolling over mortgages. What are you seeing there?
It's 100% case by case because, like I said earlier, what might work for you might not work for me. Very much so, it's a tailored approach where we look at where you're at in terms of what your needs are. Sorry, there's a cat. Do you foresee yourself potentially moving in the next couple of years because you're going to need more room, because maybe your family's expanding, or perhaps you're moving because of a job, or perhaps you're just looking to access equity for renovations or to purchase an investment property. So all of these questions we ask upfront so that we can really tailor a solution to your needs. And then we look at what the data suggests in terms of where interest rates are right now, what things have happened in the recent past in terms of inflation and GDP and employment, that kind of stuff. So it's not a one size fits all solution. You really have to look at what's important to you, what you value for your family, what works for your family in terms of budget. There's tons of options available in terms of when your mortgage is coming up for renewal. Do you simply want to renew and keep the amortization as is? Because that's when your mortgage comes up for renewal, you have the option of just continuing at that agreed upon pace of paying down your mortgage, the amortization that you have remaining. Or if you're finding that those payments are too high because interest rates are high right now compared to when you took your mortgage 3 years or 5 years ago, perhaps if those payments are too high for you, we can look at extending your amortization. So pushing it out so that'll lower the monthly payment. You could potentially look at porting your existing mortgage. A lot of people have an awesome low rate right now, but they are upsizing because their families are growing or they're downsizing. So they have the option to port that mortgage. And if we need to top it up with additional funds, so be it. So lots of options available.
Yeah, that's such a great point. I mean, I think it comes down to your risk tolerance, right? Like while we start to see this first decrease, who knows what will happen in the future? And I'd like to discuss what the Bank of Canada actually indicated. But things are wild. We've been seeing numbers go up and down. So rates could still actually go up if inflation goes the wrong direction. So if you're thinking, oh, maybe a shorter term, hoping that at the end rates are going to be in a better position. Or you may want to go with the variable because you're going to take the risk and bank that we're going to see steady decreases. But also maybe it's because you're thinking about selling. I have, clients that have been selling some investment properties and actually in some cases actually porting those really great mortgages to go and purchase different properties. So I think it really does come down to your risk tolerance and your plans, as you said. So thanks for bringing that up. And also strategy, if you are renewing, never go with your bank first, because I think Jackie can get you a better deal. But also that amortization extension to help lower those payments to make things more affordable. Just one thing I wanted to touch on was what the Bank of Canada had indicated about what's to come, because I think they gave quite a bit of potential guidance. Maybe you want to touch on that quickly.
The expectation is that the bank is going to continue to decrease their overnight rate target, but they're very explicit in saying that they're only prepared to do that if inflation behaves, it continues towards that downward trend. Economists are predicting that over the next couple of years, prime will decrease by up to 2%. Personally, I think that's a little bit aggressive. I do think we're going to see it trickle down slowly. There's a saying that interest rates take the elevator up, but they take the stairs down. So they are very quick to shoot up, but they're very slow to come down. And that's because lenders are greedy. They want to make money. And if they can charge you more interest, then they will. I think having that expectation that yes, prime will decrease, it's still going to be a question of how quickly and how often, just knowing to take things with a grain of salt and kind of look at the big picture in order to make your financial decision.
You bet. I mean, really, it comes down to what's the economy doing and do we need to raise interest rates or lower them or keep them the same? So I ate my words. I didn't think they were going to do it. Actually, I personally thought it was way too soon, especially with the disparity with the US still having a very strong economy and trying to keep those dollars in sync. But here we are. I rejoice. I have a variable rate mortgage. So yay. Yeah. Everyone, thank you so much. Jackie, thank you so much.
Thank you for having me, as always.
Love connecting with you. Of course, if you are just thinking about getting getting into the market or renewing your mortgage, you know who to talk to. Speak with Jackie if you want to know what's going on in the market. Just have a consultation and just chat about real estate in general, Vancouver, investing. I'm here. Thanks so much for tuning in. Make sure, if you haven't already, follow us on Instagram and like and subscribe our YouTube channels. And we're always open to hearing from you and seeing what topics you want discussed. Thanks so much. Have a great day, everyone.
Thanks so much.
Yay. Cheers.